Near the end of July, residents of Carbon County will begin receiving the annual notice of property valuation and tax changes in the mail. While neither the tax rate nor the county budget are increasing, the rise in the market value of homes in our area is leading to an increase in the taxable value of our homes, which may also change taxes in centrally assessed and commercial properties. Since 2020, the Utah housing market has seen record-breaking increases in the prices of homes across the state. According to Realtor.com, the median sale price of a home in Carbon County alone has increased roughly 65% from April of 2020 to April of 2022. As the sale prices of homes within Carbon County continue to climb, so does the market value of our homes. So what does this mean for you? With the taxable value of homes increasing, the payable taxes on your home may also increase. This will be reflected on your Notice of Property Valuation and Tax Changes form. To help you better understand why the taxable value is changing, we need to explain a few things. Property tax revenue, how the local real estate market affects your home's value, and how our local assessor uses that information to determine the taxable value of your home. Governmental taxing entities, which may include counties, cities, school districts, and water conservancy districts, to name a few, receive a portion of their annual revenue from property taxes. Property taxes can be broken down into three broad types of taxpayers. Centrally assessed, which is defined as commercial properties that cross state or county lines, such as railroad companies, mining companies, utility companies like telecom providers, power companies, and even cell phone providers, natural resources, and more. Commercial. This not only includes real property taxes on the business and land, but also the assets used in their day-to-day operations. This is known as unattached personal property. Residential. This comprises primary homes, secondary homes, and unoccupied residential properties. Now imagine, if you will, that these three property taxpayers make up three individual pieces of a pie. When put together, these three pieces create the whole of the annual property tax revenue for our taxing entities. As pieces of the pie change due to loss of business or increased home sale prices, for example, so do the sizes of each piece of our pie, with some areas contributing less to the overall revenue, shifting the burden to the other pieces of the pie to make up the difference. While our pie remains the same size overall, this shifting of the tax burden is required by state law in order to keep the revenue whole, and therefore the budget for the taxing entities whole. Over the years, the centrally assessed portion of our tax base here in Carbon County has decreased. Why? Because industries that were previously booming in our area, such as mining, natural resources, power plants, and more, have been on the decline. This shifts more of the tax burden onto the commercial and residential taxpayers to make up the difference in order to keep the pie whole. Now let's talk about how the real estate market affects your home's value and how our local assessor determines the value of your home for tax purposes. According to propertytax.utah.gov, the fair market value of your home is theoretically the value at which your property would sell for on the open real estate market. One of the best ways to determine your home's market value is to look at the sale prices of homes similar to yours in your neighborhood. With supply and demand driving up the sale prices of homes across the state, this in turn is driving up the market value of homes not only in our area, but statewide. In order to determine the taxable value of each home in Carbon County, the state of Utah requires that the county assessor appraises the residential properties at between 95% and 105% of the fair market value of the property. If the value determined by the county assessor does not fall into this range, the state will force the assessor to increase or decrease the fair market value accordingly in order to obtain the appropriate taxable value of the residential property. Again, going back to propertytax.utah.gov, part or all of the fair market value may be exempt from taxation under Utah law. Residential properties that serve as primary residence of any household are taxed at only 55% of the fair market value. That means that a home that's fair market value is determined to be $100,000, for example, will only be taxed on $55,000. Meanwhile, secondary residences or unoccupied residential properties are taxed at 100% of their fair market value. Going back to our pie, with this decline in our centrally assessed tax base, and because of the recent surge in the fair market value of residential properties in our area, and therefore the taxable values of residential properties, the residential piece of our pie has grown for the 2022 tax year. This change in your home's market value and taxable value will be reflected on your Notice of Property Valuation and Tax Changes form. As a final note, you can find additional tax information on your property by going to www.carbonutah.com. If you feel there has been an error in the assessment and determined value of your property, or if you have any questions about your Notice of Property Valuation and Tax Changes form, please contact the County Assessor's Office or the Clerk Auditor's Office.